Let's move to Japan, since you mentioned that early on. Economic numbers, actually, the economy is doing better than even what had been predicted. But Japan, doesn't it still have all those issues we used to worry about? Aging population, a lot of savers and not spenders or investors. Correct. So why is Japan more attractive now? Is it simply the turnaround is working and it will change all those previous dynamics?
You're exactly right that the key issues in people's mind remain aging population, big debt, savers versus consumers, and those are all true. But Japan isn't a play on the Japanese economy. Unlike the US and a lot of US companies that are more dependent on the US economy, although there are plenty of US global titans, as we call them, that get much of their revenue from outside the US, and that's an increasing trend. Japanese companies are well positioned to take advantage of the Asian growth. You've got 3 billion people in Asia in the next 20 years. They're going to turn 40. It turns out 40 to 60-year-olds spend a lot of money. It turns out 65 to 85-year-olds don't. So every day, 10,000 people in the United States turn 65. Every day, 10,000 people in Europe turn 65. Those people are going to stop spending as much, and you're going to see, and you're seeing it, you're seeing signs of deflation in places like Europe. You see US interest rates falling, fears of deflation. In Japan, they've actually, through this Abenomics program, stimulated inflation. Now, some would say it's the bad kind of inflation, prices are going up, but the ultimate is they want real estate prices to go up, they want the stock market to go up, and they want the businesses then to sell into Thailand and Indonesia and India. The Indian story is going to be extraordinary, and the real key for them is going to be selling into Africa. The African demographic boom is going to be one of the most extraordinary stories over the next 40 years. So it's kind of China for 10 years, then India for another 10 or 15 years, and then Africa after that. Japan can take advantage because they're closer. They've got great management. They've got great companies. They're under-levered at the corporate level. And the thing about Japan is it's the inverse of 1989. In 1989, Japan had peak margins, very high margins, and peak multiples. Very bad time to buy at 40,000. And now here we are at 15,000. The US, on the other hand, was trough margins and trough multiples. It's a great time to buy stocks. Now it's totally inverted. US stocks are peak multiples and peak margins. They're mean reverting. They probably are going to fall from competition. And Japanese companies have very low margins and very low multiples. So I think over the next decade, you'll see Japanese companies outperform US companies as stocks, probably by 2 to 1, maybe even 3 to 1. But it won't be every 6 months. And the last 6 months have been bad for Japan because a lot of the foreigners sold. But we think now they're starting to realize that these stocks are cheap. Their earnings are growing very rapidly, and it's a great story.